Hey, good morning, everybody. Welcome to another day. Mark Burr, brought to you by Bjork. Today is Hump Day, and it's August 31st. Also, congratulations to my son. It's the very first day for second grade for him, so I'm happy for him, and also happy for myself that we get back to our routines again. Summer gets to be too long sometimes, I think, for us parents here. Hey, let's jump right into it. We do got a couple economic news releases to go into. We have the ADP employment numbers. These is kind of our first taste for the job numbers we're going to see this week. So today we got the ADP employment. Tomorrow we'll have the weekly jobless claims, and on Friday we'll have the big one, which is the brought to you by the Bureau of Labor Statistics coming out here. So today the ADP came in. So last month, in July, we had 194,000 new jobs created. It was actually revised a little bit higher, which is good news. And then for the month of August, came in 177,000 new jobs created. So these are good numbers that we see overall here for jobs numbers coming in here. Chicago PMI, this is the manufacturing for the Chicago region. So anything above 50 is considered expansion. Anything below it becomes contraction. So as you can see here, month of July was okay at 55.8, but it worsened by about 4.3%. 4.3 on the index, dropped down to 51.5%. Obviously, it's not contraction, but it's kind of just sitting above that par line, so to speak. But another good news is pending home sales here in July. So back in June, we had a pullback, a contraction of 0.8%, and it was forecast supposed to be 0.9% increase, and it surpassed at 1.3%. So overall, decent numbers. Manufacturing not as good, but pending home sales is good. It's kind of helped carrying the economy along here. Real estate is helped carrying the economy along here. And then, of course, we've got jobs numbers coming in. So let's take a look here. Stock market's down. You know, a lot of it has to do with the big thing, of course, ADP numbers is that when they're seeing these better job numbers, they're basically it's telling them that the Fed might be on target to go ahead and raise rates. By raising interest rates, essentially what they're going to do is the free money is going away. So they liked having this free money. This is why the stock market's been taken off so much. It's been kind of artificially inflated as a result of this cheap money. Now that there's talk of interest rates going up, the base of the party is over, so to speak. Also, there's been a few members of the Fed speaking today. Again, same thing. Some that are for it. That we're reaching basically the numbers that they set forth for the unemployment, as well as the inflation numbers. And then also another thing that's kind of weakened it is the U.S. came out with the EIA report came out. It said that U.S. overstocked or came in with oversupply of oil, which dropped the prices down to about $45 per barrel here. Bond market, we were actually up a little bit further today, but what concerns me is that we started the day lower. We started the day right at the 10-day moving average and worked our way up. So right now we're about 3 basis points higher than where we left off yesterday on there. So hopefully we can keep above this, but I don't like us that showing maybe a potential trend reversal here that may be going downwards here. But what you're going to probably see this week is traders. We've been seeing this for at least the last couple of big events, like when Janet Yellen's meeting last week, that when the stock market goes down, typically that money goes into the bond market and vice versa. But you may see both markets going down here for temporary until they get that big news. So you may see stock market come down, and you may even see the bond market come down in these coming days until Friday after they get the jobs numbers. And then the traders will decide as to where they want to put their money in bonds or keep an equities market. So you just may see over the next couple of days money coming out of those markets and then probably later in the day, Friday, once they get their numbers that they're looking for, then you'll see them place that money where they want to put it, if that makes sense. All right, folks, hope that clears things up. But right now, rates are about the same as where we left off yesterday. Hope you guys have a wonderful day. We'll see you guys tomorrow. Thanks for watching. Bye-bye.